Today, we're diving into the one thing that truly separates the consistently successful traders from, well, everyone else. And it's not some secret indicator or algorithm. It's what's happening right between your ears. This is all about mastering the psychology of the market.
So, let me ask you something, straight up. Are your emotions secretly calling the shots with your portfolio? You know that little pang of fear you get when the market dips? Or that rush of greed when a stock just keeps climbing? Those feelings are incredibly powerful, and just understanding them is the very first step to taking back control.
All right, here's our game plan. We're going to start with the big picture, this idea of mind over market. Then we'll break down the two main types of mental traps, the cognitive biases and the emotional ones. After that, we'll actually build a toolkit you can use to fight back. And finally, we'll see why getting a handle on your psychology is your ultimate unbeatable edge.
You know, for the longest time, a lot of economic theory was built on this myth. The idea that every single person in the market is a perfectly logical, rational robot. But as anyone who's ever felt that pit in their stomach watching a stock fall knows, that's just not how we humans operate, is it?
And our understanding of this has changed so much over time. Back in the 60s, you had the efficient market hypothesis, which pretty much assumed we were all those rational robots. But then in the 70s, prospect theory came along and started to show that these mental biases play a huge role. By the time we hit the 90s, the whole field of behavioral finance really took off, making it official. Psychology is a massive piece of the financial puzzle.
So these psychological tripwires, they really fall into two main camps. Think of cognitive biases as errors in your thinking. It's like you're trying to find your way using a distorted, inaccurate map. Emotional biases, on the other hand, are errors that come from your feelings. That's like trying to navigate your ship through a Category 5 hurricane. Either way, you're going to get completely lost. So let's kick things off with those cognitive biases, the thinking traps. These are basically the unconscious mental shortcuts your brain loves to take to process information. The problem is, they often lead to some really consistent, predictable mistakes in judgment. And the really important thing to get here is that a cognitive bias isn't just a random mistake. Nope, it's a systematic pattern. It's like a predictable glitch in our mental software that messes with how we see reality. And oh, these traps are everywhere. You've got confirmation bias, where you only look for news that agrees with you. There's anchoring, where you get stuck on the first piece of info you see, like a stock's initial price. Hindsight bias is that classic, I knew it all along feeling after something happens. And availability bias is when you give way too much importance to dramatic, recent events just because they're fresh in your mind. Let's make this super real. Have you ever bought a stock and then suddenly you're only clicking on the headlines that say it's going to the moon, and you're totally ignoring the warning signs? Yeah, that's confirmation bias in action. It's a classic way our brains try to prove we made a good decision, even if we didn't. All right, let's switch gears. We've talked about the distorted map of our thinking. Now let's wade into the storm of our feelings. Emotional biases are what happen when fear, greed, hope, or regret hijack your rational brain and lead you to do impulsive and, let's be honest, often damaging things.
And maybe the most powerful, most primal emotional bias of all is loss aversion. Our brains are literally hardwired to feel the pain of a loss way more intensely than we feel the pleasure of an equal gain. This one bias alone drives so much irrational behavior in the market. I mean, think about this. Research has shown that the pain of losing $100 feels roughly twice as bad as the pleasure of gaining $100 feels good. Let that sink in. That imbalance is exactly why so many traders hang on to losing positions for way, way too long. They're desperate to avoid the pain of actually admitting they were wrong and taking the loss. And the emotional storm doesn't stop there. Overconfidence can make you think you're invincible. Regret aversion can literally paralyze you from making any decision at all. A lack of self-control can make you ditch your strategy at the first hint of trouble. And status quo bias, that just keeps you stuck with what you have even when it's clearly not working anymore. Okay, so we've identified the distorted maps and we've spotted the emotional storms. It all sounds a bit grim, right? But here's the good news. Now we get to talk about how to navigate all this. It's time to build your bias-busting toolkit and move from just being aware of these things to taking direct action. So, to fix that distorted map of your cognitive biases, you need a clear 3-step playbook. Step 1, educate yourself. You can't fight an enemy you can't see.
Step 2, force yourself to rely on objective data and analysis, not just your gut feeling. And step 3, this one is tough, but it's crucial. Actively seek out opinions that disagree with you. It's the absolute best way to pressure test your own ideas. Now, for navigating that emotional storm, the toolkit is a bit different, a little more personal. It all starts with self-awareness, knowing what triggers your fear or your greed. Next, you build a fortress of logic by setting strict trading rules, your entry, your exit, your risk, before you ever get into a trade. Then you use tools like stop-loss orders to take the decision out of your hands. And finally, find someone to hold you accountable. It is so much harder to break your rules when you know someone is watching. So let's bring this all together. Why have we spent all this time dissecting our own brains? It's simple. In a market where pretty much everyone has access to the same charts, the same news, the same data, your mastery of psychology becomes one of the only true competitive advantages you can possibly develop. When it comes right down to it, mastering your psychology leads directly to better trading. It gives you the discipline and consistency to actually stick to your plan. It protects your hard-earned capital from fear and greed. It builds the resilience you need to handle losses without panicking. All of this is what creates a sustainable, long-term career, not just a short-term gamble. This quote from our source material just nails it, doesn't it? It really summarizes our entire journey today. It's all about creating this positive feedback loop. Self-awareness leads to disciplined behavior, and that discipline is what fosters a sustainable mindset. That right there is the core of successful trading. And that leaves us with one final, very personal question. Now that you can recognize these traps, which one really speaks to you? Which one felt a little too familiar? Is it that confirmation bias? Is it loss aversion? Take a second to really think about it, because identifying your biggest vulnerability is the first step toward victory. So, which of your own biases are you going to tackle first?